Ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news commodity markets are signalling more intense stress, with copper and sulphur jumping to new all-time highs and aluminium jumping to near its brief pandemic spike. Tightening supply from the Middle East standoff is driving the cost of these fundamentals. Today, though, Trump is in Beijing, where heavily choreographed set pieces are up to play out ahead of the formal discussions. Trump got welcomed by a non-Politburo member, the first time China has done that. And so far he's been treated just like any other visiting head of state, rather than the special senior welcomes by his predecessors. And China is organising one of its tankers to exit the Strait of Hormuz in defiance of the US blockade, right at the time these meetings take place. US mortgage applications were little changed last week, but with this week's push higher in benchmark interest rates, they're likely to fall when reported next week. American producer prices are up 6% in April from a year ago, getting a 1.4% shove in April from March. Distorted input costs from Trump's Gulf War are embedding uncompetitive pricing in American-made goods. Only the pandemic surge has been greater, also on Trump's watch. It isn't clear right now why American producer prices are rising faster than just about anywhere else, but history will eventually explain that. US crude oil stocks took another outsized tumble last week, according to official EIA monitoring. Petrol stocks fell there sharply too. The industry is raking in record profits on these lower volumes, while the US, a net petroleum producer, is feeling the brunt of these price hikes as a classic study in oligopoly power. Meanwhile, the US Treasury 30-year bond yields have risen above 5% on secondary markets. Apart from the pandemic spike, this is the first time they've done that since 2007, so a two-decade high. The overnight US Treasury 30-year bond auction delivered a median yield of 4.99%, where the top bid was 5.05%, up from 4.82% at the prior equivalent event a month ago. And we should note that Kevin Warsh is now the Fed chairman, but ex-boss Powell is still there. Given the Trump-induced inflation surge, he is unlikely to be able to deliver on Trump's demand for lower US interest rates. In Canada, their central bank says they see no evidence that AI is having a material impact on their jobs market, yet anyway. For them, the benefits are outweighing the costs. EU industrial production rose in March from February, but that wasn't enough to counter their outlier faster rise a year ago, so it ended down 1% year on year. An outsized fall in Germany twisted these results. In its May monthly report, OPEC cut its forecast for global oil growth in 2026, joining other forecasters in cutting expectations due to the Iran war. In Australia, the wealthy are reeling after their latest budget signalled a levelling of the tax playing field and a wind down of concessions for wealth. To be fair, these are to be unwound over many years, but the big end of town is furious that they are losing their perks. Certainly, those dependent on the property market there can see an end to the gravy train. The US Treasury 10-year yield is now just on 4.47%, unchanged from this time yesterday. And the price of gold will start today up $12 at $4,690 an ounce. Silver's up $3 at just over $88 an ounce. And American oil prices are holding at just over $101.50 a barrel, while the international Brent price is just over $106 a barrel, which is down $1.50. And the Kiwi dollar is down 10 basis points from yesterday at just on 59.3 US cents. Against the Aussie were down 60 basis points at 81.7 Australian cents. Against the euro were unchanged, though, at just under 50.7 euro cents. That all means our trade-weighted index starts today at just on 62.6, which is down 10 basis points from yesterday. And the Bitcoin price starts today at $79,447 and down 1.3% from yesterday. Volatility over the past 24 hours has been modest, just on plus or minus 1.7%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.